Hello everyone, welcome to the market outlook for the week. Gaurang Shah from Geojit Investments Limited. And before I go any further, let me give you certain levels on the market. Continued momentum after Friday's sell-off, primarily led by the fears in the market about retaliation by India on towards Pakistan for the unfortunate terrorist attack in Pahalgam. Markets have recovered. There was a subdued start in the morning, but as I speak to all of you all this Monday morning at 10:30, levels are Sensex up about 795 points, 80,005 is the level on Sensex. Nifty is up about 240 points, 24,280 is the level on Spot Nifty. 630 points uptick on the Bank Nifty, 55,285 is the level on Bank Nifty or Nifty Bank. Rupee dollar and crude oil, strength of 0.08 paise on rupee, and the level is 85.37 rupees to a dollar. And on the crude oil front, a marginal uptick, but on the lower level, $76.10 to a barrel is Brent, $63.30 to a barrel is NYMEX. Outlook on crude oil and rupee dollar, expect weakness and a range-bound trade on the crude oil basket, that is Brent and NYMEX. Possibly we may see lower levels because of the supply side increase and the consumption related downward tick, and of course the expected production of crude oil to be at higher level. That will possibly make $65 below NYMEX, Brent, I beg your pardon, and towards $61-62 on NYMEX as we go forward into the days ahead for this week and the week after. On the rupee dollar equation, as mentioned last week, we are anticipating some more strength being built up on the rupee, and levels towards 85 on the strength on the rupee cannot be ruled out. And there is also a possibility that the strength that the dollar was exhibiting till this time against major currencies, including the Indian INR, expect dollar to weaken a bit, and we could see levels of 85 on the strength as far as the rupee is concerned. Now, coming to the market outlook for this week, it's going to be a truncated week, friends. Thursday, 1st of May, Labor Day, Maharashtra Day, we have an off. Wednesday, 30th April is going to be the monthly expiry for the F&O segment, and that will lead to a little bit of choppiness and volatility, which may possibly see highlighted, rollovers on Wednesday, and tomorrow being Tuesday, we may see a little bit of choppiness, volatility. It is going to be important to maintain the uptick as far as today's close is concerned, and if we do get a decisive close on the Nifty above 24,300, 24,350 levels, then there is a possibility of higher levels of 24,500, subject to, of course, volatility and the news flow as far as the situation between India-Pakistan. And there is definitely going to be a retaliatory action taken by by India. The unfortunate part, friends, is that how, when, and in what form, and to what extent, that is something that none of us know, and I think it's going to be very difficult to predict on that. So not going into any kind of prediction between the situation India-Pakistan. As and when it happens, we'll have to possibly react to it. One reaction to this situation was already given on Friday when we saw the markets correct. But then, of course, anticipating that over the weekend, that is Saturday, Sunday, retaliatory efforts would be put in place by India. But there is still discussion, negotiation, strategy that has been put in place with respect to how we are going to react. Defense Minister, Ministry of Defense, Chief of Armed Forces, National Security Advisor, Mr. Doval, and the Honorable Prime Minister, Mr. Narendra Modi, all of them are busy trying to draw down the strategy. And of course, as and when it unfolds, we'll have to react to it. But that's the clear and present danger, at least in the immediate short to medium term. In case if the retaliation has to take an ugly turn, and if does get prolonged, then the reaction is going to be negative on the markets, and we may stay subdued for some time. This is purely from a short to medium term point of view. But this is not the first time, friends, that this kind of situation has risen between the two countries, India and Pakistan. In the past also, we've seen things get a little bit ugly at the border, and the kind of activity that Pakistan is involved into. and we have recovered. So if you're an investor, hold on to your horses, wait out for some time. If we get an opportunity on the lower side, I think that will be an appropriate time to deploy your capital in a phased out manner. And if you're a trader, then my humble request to all of you all is, like always, please put your stop losses in the system, maximize keep your trailing profitable stop losses in place in the system. Don't try to guess anything, because if any eventuality happens between India and Pakistan, that may lead to a little bit of short to medium term correction and and consolidation on the downside. So that's the strategy for the traders. But overall, remain positive, and I hope that the impact of this situation will not have a prolonged long-term negative impact on the markets. As far as other triggers are concerned, friends, flows on the market side, domestic institutional investors were on the sell side because of certain redemption related pressure from the retail investors. But one thing good is that the foreign institutional investors have turned buyers, and that has supported the market. Even last week, domestic institutions sold, FIs bought. Today's number, we'll have to wait and watch by the end of the day as to what the numbers are. And in terms of volatility, well, the India volatility VIX index is again at 17%, at 17.03, I beg your pardon, with an uptick of 1.05%. This is also a concern, because whenever the volatility index, that is India VIX, crosses over to 15, 16 and beyond that, it very simply reflects the kind of situation that is likely to come in the coming days. And it explains that the volatility is going to be at an elevated level because of the situation, India Pakistan, and of course because of the expiry that will happen on Wednesday instead of Thursday, because like I mentioned, Thursdays is an off. Levels to watch out for on the markets: Nifty spot 23,800, 23,800 to 23,600. I'll repeat. On the lower side, worst case scenario, 23,600 to 23,800. On the higher side, possibility, like I mentioned, close about 24,300, 20,350 decisively will trigger a momentum towards 24,500, which is a big hurdle, at least in the immediate short to medium term, for crossover. And of course, the situation that exists on the earnings front, friends, however, it has been a good performance, whatever we've seen up till now. Last week, we saw numbers from Reliance Industries much better than what the street estimates were, and there are revision of targets on the upside for Reliance Industries. So as far as whatever we have seen, it is better than the third quarter expectation, and of course there are a lot of numbers that are yet to come out. Hoping and expecting that those numbers will also satisfy the market and there won't be any major disappointment in terms of performance as far as the fourth quarter is concerned. So times like this are challenging times. One needs to be extremely careful in terms of deployment of capital into the stock market investment. But having said that, instead of trying to find the right time and the right price and the right level, our sense at Geojit Investment is that you should at least take a step forward rather than being in one place frozen or taking a step back. And with that perspective in mind, like always, every Monday, we share two investment ideas from a long term point of view. The first investment idea, I have already named it, Reliance Industries Limited. We've been positive on Reliance Industries for a very long time. And our anticipation is that as we go into the future, contribution from retail, contribution from crude to chemicals, contribution from refining, and of course other businesses that Reliance has, including the geo mobility business, will strengthen the position of the balance sheet and will give a positive impact as far as the bottom line is concerned, that is net profit. So the first investment idea is Reliance Industries Limited. The second one is from the banking pack, a mid-cap name from the public sector bank, Indian Bank. This bank, Indian Bank, has been a very quiet performer when you compare the numbers with the large cap public sector names like Bank of Baroda, State Bank of India, Canara Bank, PNB, Bank of Baroda, Bank of India, etc. Mid-cap bank has been a consistent performer, and we expect the banking sector performance not only to be good at this fourth quarter, but also for this new financial year that we've kicked off, and of course for the next couple of financial years. purely because of the improvement in asset quality, improvement in gross and net NPA, improvement in terms of provisioning coming back, and of course the interest rate cut scenario that we are witnessing from the Reserve Bank of India. We expect two more rate cuts to come through by the time we say goodbye to the year 2025, that is December 2025, two more rate cuts in form of 0.25, 0.25, and that will excite the loan book growth. So, two investment ideas. First one is Reliance Industries, a large cap name, and the second one is a mid cap investment idea in the PSU bank in form of Indian Bank. Mind you, friends, these are all long-term investment ideas, so you need to have a longish time horizon. And like I said in my opening remarks, these are difficult times. Need to be very, very prudent in terms of how we deploy our capital, but there is always a beginning. Take a step forward, start at current levels, and on dips, as in when you get one, you can accumulate it from a long-term point of view. Thank you very much for your patience hearing. I'll see you again next week. Till then, please do take care of your health. Bye bye.